Bitcoin vs. gold, what's the better hedge in 2025? It's a debate that refuses to go away, and in today's uncertain global economy, it's more relevant than ever. As investors seek shelter from inflation, geopolitical risk, and economic turbulence, the question becomes urgent. Where should your wealth go, into a shiny bar of gold or a digital wallet full of Bitcoin? Let's start by zooming out and looking at what it means to be a hedge. A hedge is a kind of insurance, a safe place for your capital when the rest of the market turns sour. Traditionally, gold has been the go-to asset. It's tangible, it's scarce, and it's been recognized as valuable for thousands of years. In moments of panic, when currencies devalue or central banks flood markets with liquidity, gold tends to hold its ground. It doesn't yield income, but it offers peace of mind. On the other hand, Bitcoin is a digital native. Just 15 years old, it's not just a currency or speculative asset, it's a whole new asset class. With a hard cap of 21 million coins, Bitcoin promises absolute scarcity. Unlike fiat currencies that central banks can print at will, Bitcoin's supply is algorithmically fixed. And in 2025, with the most recent halving behind us, Bitcoin has become even scarcer, adding fuel to the argument that it is a digital gold. But scarcity is just one part of the story. Volatility matters too. Gold has a long history of being relatively stable. It doesn't shoot up 50% in a week, but it also doesn't collapse overnight. Bitcoin, by contrast, is infamous for its swings. It can gain or lose thousands of dollars in a matter of hours. That kind of volatility makes it a difficult hedge for the faint of heart. But for the bold, it's also part of the opportunity. Massive returns often come hand in hand with massive risks. Now, let's talk about inflation. In 2025, inflation remains a persistent concern. Central banks are navigating between cooling inflation and supporting economic growth. In this tug-of-war, traditional assets like bonds and cash have lost some of their appeal. Gold, with its long-standing reputation as an inflation hedge, has done reasonably well. But it hasn't been explosive. Bitcoin, however, has attracted a younger generation of investors who see it as a superior inflation hedge. It's borderless, programmable, and increasingly integrated into the financial mainstream. In countries with unstable currencies from Argentina to Turkey, Bitcoin is already being used as a lifeline. It's not just a hedge against inflation, it's a hedge against broken monetary systems. And then there's institutional adoption. In 2025, we've seen more pension funds, asset managers, and even central banks experiment with Bitcoin. Spot ETFs are now common, custody solutions are robust, and regulation, though far from perfect, is clearer than ever before. Gold still sits in central bank vaults, but Bitcoin is now making its way into the portfolios of the world's largest financial players. That legitimacy was unthinkable a decade ago. But the story doesn't end with finance. Technology plays a role too. Bitcoin is programmable, portable, and divisible. Gold has none of those things. You can't send a bar of gold across the world in seconds. You can't write a smart contract with it. And you definitely can't store it without incurring cost. With Bitcoin, anyone with a smartphone can hold a significant amount of value. In a digital world, Bitcoin aligns more naturally with the tools we use every day. Still, gold is something Bitcoin may never have history. It's been through world wars, economic collapses, and currency devaluations. And it's still here. That deep historical trust gives gold a psychological edge. There's something about holding a heavy, gleaming metal in your hand that no digital token can replicate. For many investors, especially older generations, that's not something to overlook. Security is another factor. Bitcoin is protected by cryptography and a decentralized global network of miners. But it also faces risks: cyber attacks, wallet mismanagement, regulatory crackdowns. Gold, while physical and cumbersome, doesn't rely on electricity or the internet. It just is. But that also makes it harder to move, harder to divide and harder to use in a world moving toward frictionless transactions. Environmental impact is worth mentioning. Gold mining damages ecosystems and uses toxic chemicals. Bitcoin mining, meanwhile, consumes a lot of energy, though in 2025 a growing share comes from renewables. Both have environmental costs, but Bitcoin's can arguably be optimized through innovation, while gold's impact remains inherently physical. Let's not forget liquidity. Both Bitcoin and gold are highly liquid, but Bitcoin trades 24/7 across borders on a global network of exchanges. It's always on, always accessible. Gold, while liquid, still moves through more traditional, slower channels. In a crisis, having an asset that can be instantly converted into fiat or stable coins can make a big difference. So which is the better hedge in 2025? The answer depends on your worldview. If you trust institutions, prefer stability, and value a long-term track record, gold is your friend. If you believe in decentralization, are comfortable with risk, and think the future is digital, Bitcoin might be your bet. Some investors, wisely, hold both. The real insight may be this: gold hedges the past, Bitcoin hedges the future. In a world where uncertainty is the only certainty, diversifying your hedges might be the smartest play of all. So whether you're stacking sats or stacking bars, make sure you understand what you're hedging against. Because in 2025, the old rules are being rewritten, and the smartest investors are those who adapt before everyone else does.